Hello everyone, welcome to my YouTube channel. André Cardoso here. Thank you for being here as always, and for today I want to share with you some of the patterns that I think the market may produce for us. First of all, let's start with SPX 500, which is now bouncing from this eventual support level. So I saw this as a potential, or actually at this point it's very remote possibility to form these edge and shoulders, but that's what I see. This is a visual pattern, so it doesn't require any tool to try to identify. And as we can see, I can identify this as a potential edge and shoulders, but even though we still need to see a clear violation of the support level in order to trigger that pattern. And we have also the 200 moving average approaching from below also as a potential element of support. So let's pay attention to that possibility of false breakout of the neck. It's also one of the possibilities. Let's observe. But I remain with my bullish trade. So I shared this before with some of you. The opportunity to go long after the formation of these edge and shoulders with SPX 500. So let's say I'm still holding a portion of this trade without ignoring, of course, the potential for that edge and shoulders, which may triggers a pullback or a retracement, even if limited for the SPX 500, it may trigger that retracement. For now, I think we are now facing this potential or eventual ascending trend line support. It may act as a neck zone. It's kind of an ascending neck. We have also signals. Actually, we don't have signals of bullish divergence at this point, but nothing's wrong, at least with the momentum. Also with RSI showing some oversold conditions here. So basically I will not be surprised to see more upside momentum for SPX without trading below this trend line. But of course I can be wrong, and the market will prove that for me. But if that happens, it can trigger these lower degree edge and shoulders there. And of course this is kind of a megaphone formation. Actually, if SPX 500 decides to reject this price zone and starts to fall from here, I will not be surprised to see this structure retested again later, with SPX 500 being forced to pull back at least to the previous daily fractal support. But let's see. I still holding my longs, or a portion of my initial position size, and of course I projected this before, this bearish outbat pattern at 113% Fibonacci extension level, which may create the idea that I want to see a new high. So I don't want to see a new high. I don't want to put some pressure inside the market, because I'm not able to do that. But what I want to say that if the market decides to print a new higher high, completing the pattern, and then starts to fall, that may trigger some interest for a short side for the SPX 500. But that even though that will depend the structure that we have once the price approaches that completion point. As you can see, the price fails that completion point just by a couple of dollars there. So 42.66, it's a new higher high for SPX 500, and I projected the pattern at 42.73. So of course, if the market decides to fall from this price zone, which will trigger the head and shoulders, but will not confirm the pattern for me. So I will not be surprised to see that happen also. But what I need to see is the price touching the 113% Fibonacci extension, eventually a few points higher, and eventually the default target for the inverted edge and shoulders. So I will not be surprised to see that also happening. But at least I want to see at least a 113% Fibonacci extension being reached, and then if the price decides to trade the 200 moving average or the 200% Fibonacci extension level, so be it. But at least the 113% Fibonacci extension, so I need the price at 42.73 for the SPX 500. Also shared with you before this chart for the crude oil, and the opportunity that I shared among my subscribers to trade above this next zone for an inverted edge and shoulders. So as you can see, and you can go back on my videos and see the projection for that trade at 71.46. We have one first moment where the price finds some pressure right there at 71.46 or a few points above it, starts to pull back, and when the price starts to pull back, starts also to develop or to form this kind of ascending structure support. So I believe this can be also an ascending wedge, and I will pay attention to the eventual violation of that wedge above, but with or being followed with the pullback. I want to see how the price reacts above the wedge. I want to see if the price keeps trading above the wedge, okay, and at some point it can trade back to the wedge and find support and start to trade above that wedge, and finally at some point it will trade higher. So I need to see that wedge being, or that trend line being respected as a support. But if I see the price recovering the structure again, so inside the wedge again, and then breaking below the ascending support, that may offer a nice situation to if you don't want to sell it, at least to search for a new opportunity to go long, and for that to happen, I need to see then later the price pulling back and printing a deeper or a significant retracement at least. And for now, of course, this is pure speculation. I don't know what will happen, but I'm paying attention at this point to this ascending wedge. Let's see how the market will behave as soon it breaks the structure, or above or below. Trading below, if the market decides to break below the wedge, I believe there's also this kind of ascending channel. This is a parallel channel holding these highs, all those highs here. So actually this is a trend line resistance that we need to pay attention to, not very much the support, but this trend line, the recovery of this trend line may offer a deeper retracement. So, and that should be synced or converging with the violation of these ascending wedge trend line support. For crude oil, dollar versus the Mexican peso, I shared this chart at the beginning of the week, I believe, also on Twitter, if I'm not wrong. Dollar versus the Mexican peso. I shared these with default targets for this bullish sharp pattern at 1990. 50% Fibonacci retracement level. This is the default target for this lower degree or minor bullish sharp pattern, completed at 1961, converging with 1966, which is the default target, not the default target, I'm sorry, the default completion point for this major or higher degree bullish alt-bat pattern. This major bullish alt-bat pattern should trade the 38% Fibonacci retracement. So it's a huge projection. We are, of course, taking this perspective into a 2 hours time frame chart. It can be even, it may look even harder to achieve, but if you start to increase your time frame, is not so far away from the recent high. So I'm not saying the market will go there, I'm saying the market tends to search for that default 38% Fibonacci retracement level after completing the bullish alt pattern at 113% Fibonacci extension. The same way that I will say to you, the bullish shark pattern usually search for the 50% Fibonacci retracement level. I don't know if the price will trade higher than that or not. What I know is that the market tends to search for the 50% Fibonacci retracement. So that's in this case, as you can see, the market finds resistance above or beyond our default target zone or our default first target zone. So we have targets also for the Mexican peso at 38% FIB, so I expect to see the price threatening again the previous structure support and most recent weekly fractal resistance for the Mexican peso. Let's go into euro versus dollar, and let's go into a lower time frame, 1 hour 16 minutes time frame chart. I shared this one with you, the bearish 2618. I shared this on Twitter, I shared this on TradingView, and of course, and with the communities that I work with at forexanalytics.com. You can also visit my work there. And of course, we shorted this bearish 2618 on my Telegram. So I shared this opportunity to go short with the pair after the completion or after the formation of this bearish 2618. My first target, as I said before, was projected at the previous structure lows, the bottom of the structure, and the most recent support at that time. So when I shorted the market. I have a second target projected at 120.56, so it's basically kind of a convergence between previous structure support and those Fibonacci extension levels. I want, and not only, but also the major retracement, the 38% Fibonacci retracement level right there. So I have a nice convergence or a nice cluster box below the most recent support level, which I use it as my second target for the bearish 2618 trade setup, which is also the default projection for this symmetrical pattern. So basically it's an ABCD pattern where AB is equal to CD, and where which I use as my second target for this setup. So basically we're still trading a consolidation process after this bearish swing. We're still trading inside this kind of a consolidation process, moving sideways. So at this point I will not suggest any kind of involvement, for the euro versus dollar. If you want to short the market, you need to pay attention to these lows, because it can happen something like that, a bounce from this price territory. It may offer a nice opportunity to, and basically I want to see that symmetrical pattern usually offers a nice bounce. Let's see if that will happen. So if you want to short the market, probably you are thinking on a breakout of this most recent piece of data here. So you need to wait for the violation of this structure. So, but even if you want to go short, or below the fractals, or below the ascending trend line support, you need to take into consideration the previous structure supports and the convergence that we have here with those major Fibonacci levels. So that being said, I have no interest to go short for euro versus dollar at this price zone. Specifically, if you are trading at the bottom of this, as you can see, the bottom of this potential channel, so you need to confirm somehow the market wants to trade even lower. I shared also this on a higher time frame just to call your attention to this previous trend line resistance. Note that we're still trading above this previous momentum. So until the price still trading above this trend line, I believe there is room for more upside, and I'm not searching for more shorts from this price zone. I shorted the bearish pattern there because I saw the sequence, and when we see this type of sequence, there's no room for mistakes. It's a technical double top, support, golden Fibonacci, resistance. We short the market. There's nothing to fear, or there's nothing to think about. Oh, is this real bearish 2618? What should I expect here? There's nothing to question about this process. It's a technical double top and short the bearish 2618 trade setup. Nothing to fear about this setup. So if you miss this opportunity to go short, I will not advise you to go short. I will not suggest you to try to go short at this price zone, because I believe there's also a probability for a bounce from this price zone and for more upside momentum for euro versus dollar. That being said, pay attention not for the short side, but for the long side of that trade for euro versus dollar. Euro versus the yen, we have these, let me go into 12 hours time frame, daily time frame. I think I become tired of these charts, because I projected this pattern once. Actually, we were trading the first level, the golden Fibonacci. We were trading below this level. Actually, I believe at that point we were trading the monthly fractal, or very close to this price zone. I'm not sure if at the retest of the previous highs. I'm not sure at this point, but it doesn't matter. I started to project this bearish shark pattern once I saw the price invalidating the pattern at the golden Fibonacci. Once I saw the price starting to rally above the golden Fibonacci extension, I started to project that eventual run to the 224% Fibonacci extension level. And as you can see, we have this kind of ascending trend line support, which is the most important element at this point. If you like to consider those trend lines as elements for your trading, I don't use trend lines. I respect them to try to identify what type of structure we are, or the price is trying to build for me. But it's not the trend line itself that will offer me an edge to trade. Okay, if I see a specific pattern respecting a specific trend line, that will increment, or that will increase the probability for my trade to work, or for that pattern to work, because we have already the price multiple times rejecting that trend line, and eventually another time, why not? And specifically, if you have that an harmonic pattern formed, why not to take advantage from both, if you wish. So I projected this pattern a lot of time before the completing, and of course I shorted. I shared also this opportunity to short that bearish sharp pattern at 133.39. So I remain optimism about the probability for the trade to work for us. Of course, as I said before, we never know the outcome, but if I'm not positive with my strategy, who will? So I need to be positive with, when I push a trade, I need to believe the market will respect the strategy and will respect the pattern itself. And because the market has proven already for myself that those patterns tends to work. So sometimes they will fail, and then when they fail, that makes part of the process also. But usually the risk reward you can apply to trade those patterns will justify for sure the risk, and will justify the attempt to go there and to try to take some advantage for sure. Though the risk reward for those patterns is very, very friendly, which allows you to repeat this process multiple times, Well, and that being said, that's what it is. I shared this one with my subscribers, shared at 133.39. I don't know what's happening with the 3 today, but 133.39, 224% Fibonacci extension. We have now a monthly fractal resistance, actually a weekly fractal resistance at 134.12, and the most recent daily resistance, or the most recent resistance, at 133.75. So we still need to see a clear violation of the most recent support at 132.65. I believe that may offer a clear violation of the most recent lows, may offer that retracement or that pullback expected. Of course, as I said multiple times, the shark pattern tends to search for the 50% Fibonacci retracement level. The default projection for this trade is something similar as 6.8% fall, which means 911 points on euro versus the yen below your entry price zone. So that being said, there is a lot of room for that pattern to work. Let's hope for that to happen. That's the only thing that I need to do after entering my trade, is to start to hope. There's nothing more you can do, my friend. I don't pray for the market. First of all, I'm not a religious person. I don't pray at all. But specifically for the market, if you start to pray, you will start to lose your money. But the idea is the point here is we don't think and we don't pray, or we don't hope things to happen. We just need to follow the rules. Then, of course, I'm already identifying the pattern. All the ingredients are there. I already inside this trade. I can hope for a little bit for the markets to trade in my direction, because we also need the luck for the market to trade in your direction, and that's the only part of the trade that I need luck. If I need the luck for the market to trade in the direction that I expect the market to trade, then it's the pattern working, or it's the pattern not working and being invalidated. It's the process that we need to embrace. And if you trade any other strategy, I believe you will think the same. If you trade a specific pattern not related with harmonic trading, if you trade any other type of sentiment inside the market, because when you search for a specific pattern, you are also searching for a specific people reaction, and that translated into numbers, it transforms into a symptom which creates a reaction on price. So basically, we trade human reactions, and sometimes we think the humans will react in one direction, and the humanoids will go in exactly the wrong direction, or the direction that we are not expecting at that point. And that's when the pattern starts to fail, when we sit in the wrong direction of the market. I'm not talking about the trends. Trends is a completely different scenario. When you sit, you identify a specific pattern, which is, just by an example, you identify the pattern, but that is not the best moment to go short or to go long with that pattern. It's a perfect pattern, all the ingredients are there, but there's something telling you that this is not the best moment to go there. And sometimes you need to stay away and sit and don't trade at all. Sometimes we cross those sequences also. So euro versus the yen, we're still holding this potential short opportunity for the pair. Let's hope for that pair to trade in our direction. As I said before, we have also the 38% Fibonacci retracement pointing to this previous monthly fractal resistance. So I decided to create a first target zone at this price zone. So if the market decides to approach the 38% Fibonacci retracement, I will break even my trade and I will start to partitioning the same. Australian dollar, Aussie, let me go into 1 hour. Actually, let me increase this a little bit, 2 hours time frame, I believe it's enough, or 4 hours time frame. Another one that it starts to be annoying to follow during this sideways moving process. I don't know how much time we spent here already since we approached these highs. 161 days inside this range for the Aussie. A few patterns there, as you can see, a couple of them. We have there the bearish shark pattern, we have the inverted edge and shoulders. At some point I saw this as a potential edge and shoulders formation, so I saw this, my initial edge and shoulders was this one, and we were trading at this point when I decided to push a trade, or a few points below, and I can't remember exactly what price I pushed the trade, but we pushed the trade below this next zone, assuming the market will trade in our direction and the price finds support right below the previous lows, and of course forming then later forming later one inverted edge and shoulders. Bearish shark pattern at 224, another example, and another potential edge and shoulders here, and another situation where I still holding this trade because the price did not invalidate it was not pushed to my limits, to my stops, which were positioned at a few points above the most recent highs. In fact, the market surprisingly respecting my limits, so we're still holding these short opportunity for the Australian dollar, and it's one of the few not working in our direction, in fact, because almost all of the others finally a great sequence of setups to trade, at least the most recent ones, and sometimes it will be a great sequence of trades against you, and you need to be aware of that. But Aussie, at this point, I can see this as a potential edge and shoulders. I was seeing this as a trigger for that pattern, so I still holding my shorts for the Australian dollar, but I will not be surprised to see if the price decides to approach these previous structural highs, the previous daily fractal resistance at 77.65. That can print as a bearish shark pattern, which may offer a nice short for the Australian dollar. But for now, I remain my let's say my mid-term bias, or I can't use a mid-term because we spend a lot of time inside this range at almost more than 3 months already. So this is kind of a long-term, almost long-term, mid-long-term projection. I remain my bias as a bearish for the Australian dollar. Let's see if that will be the case. Now, almost finishing here, let's go with the cable. I shared these as a potential cap. At the time that I shared this one, the market was trading very close. Actually, the market was trading very close to the default target for this double bottom. Okay, we have a technical double bottom there, and the default target for that pattern at 41.41. As you can see, as soon the price touches this price zone, it starts to pull back again, and then 224% Fibonacci extension, 141.94, another opportunity that I shared with my subscribers to try to go short, at least to try to go to the 50% Fibonacci retracement level, which is the default target for that shark. And we see then later a third high or a new higher high above the previous ones, and in fact a new daily fractal resistance printed above the major one, printed above the previous highs from February 23. So and that being said, we are now inside this range, bouncing from the support and falling from the resistance. So at this point there's nothing to do at this point, in my opinion. We are also threatening this 200 moving average on a 4 hours time frame chart. So I admit it's still possible to see the cable with an attempt to approach the previous major resistance again, 1.400. So let's see if that will happen. If that happens, that will complete, or that may complete, the bullish shark pattern also a few points below the fractal. A few points below we have the golden Fibonacci extension level. So let's observe how the market will react. As you can see, the blue heads and shoulders can also put the price trading this 200% Fibonacci extension level, which points to 139.59. But I need to admit this is starting to fade. So with the market bouncing from the next zone multiple times, at least a third time already, one first, a second, and a third time already, bouncing from the next zone, I will not be so surprised to see resilience or the price. Actually, it will not be so easy, I believe, to trade below this price zone again. So I don't put my 2 cents at this point. If you want to short the price, if you want to short the cable, I believe this was the best moment to try it, with stops above the previous structure highs. Of course, you need to provide some room for the price to work, and because we have that major resistance there, you need to respect that level. But if you want to go short, this was probably the best moment to try it, not from this price zone. This price zone can be very tricky to trade because we have multiple potential support elements approaching from below, including this major ascending trend line from this wedge right here. So we have this potential trend line, which points also to the 38% Fibo, which may converge, not pointing, but it may converge with a retest of this trend line and the 38% Fibonacci retracement level, and the default target for the shark pattern, which is the 50% Fibonacci retracement. Okay, so we need to observe that cluster box, that convergence box. Actually, you can see the price nailing or almost finding support very, very close to that cluster box. I projected that target zone for the shark pattern for the, let me change this color to try to identify them. These orange shark pattern, I projected the default target at 140.28, and we had the most recent support, the most recent lows at 14.34. So basically just missed by a couple of points, and the market starts to bounce from here. So nothing to do, in my point of view, nothing to do here. Even if you want to short the heads and shoulders, I don't believe it will offer you a nice risk reward opportunity, because you are trading, well, it's 100 points. It's one trade for 100 points. So even if 100 points below the most recent lows, if you need confirmation, you will need to see the price trading below the support and retesting the support and rejecting it. But even if you use a one-to-one risk reward, 106, let's say 106 points above your entry as your stops, it will not offer you a nice and friendly risk reward situation to trade, in my opinion. And it can be wrong, and eventually missing this trade, and later you'll be talking about the magnitude of this setup with cable trading, the weekly fractal. As I said, I don't know the outcome of I don't know what the market will do next. but at this point, in my opinion, my humble opinion, it doesn't offer me, at least for me, it doesn't offer me a friendly risk reward opportunity to put my capital at risk at this point. So I remain on my long-term and long-term perspective. My bias remain bullish for the cable, and of course that will be confirmed with the validation of this cup and handle formed right here below the monthly fractal. So a violation of these previous structure highs may confirm the cup and handle, and we have a huge run to trade for that cup and handle. Now let's see the New Zealand or the Kiwi, and I decided to, I projected this one yesterday, I believe. This was a potential, not a potential, but one eventual bullish crab pattern at 70.53. So this is an example of a trade setup that we can use and repeat over and over again. So what this setup means, this means I will wait for the formation of the crab pattern at this price zone, 161.8 extension level. If that happens, it allows me to create a scenario where I want to go long. I want to trade the 38% Fibonacci retracement, and I want to say that if the market trades 40 points below my entry point, I will jump out of this trade, which means I'm trading for a 1-2 risk reward opportunity. I'm not trading, but I'm projecting a trade setup for that to happen. Which means I can create an alert a few points above my entry point or my entry price zone, or I can create an order, a limit order to go long once the price touches that level. Of course, which ways you prefer, it's up to you. Sometimes I prefer to put an alert or set a couple of alerts above my entry price zone, and sometimes I use a pending order to push the trade as soon as the price touches that level. So my vision for the Kiwi remain bearish, at least for short term, remain bearish, but I will pay attention to this bullish or the potential bullish crab pattern projected below. Okay, in one of the examples that I use, that I'm using here, is kind of a 1-2 risk reward situation where I enter the trade and I will put my stops below and my target, my first target at 38% Fib, and then a second target at the golden Fibonacci retracement level. And those who are already trading with me on Telegram, you already know how this process developed. At my first and my second target, we already know what to do if the price decides to approach those levels. But for now, this is not a setup. I did not prepare this setup yet, so I did not send this one for my subscribers, at least for now. So I'm still waiting I'm still waiting to see if the price will actually approach this price zone. What we can see at this point, and that will depend how the market will react from this price zone. So since we are already, or we are now threatening the previous or the most recent resistance, let me change this color. So since we are trading this previous structure resistance level, we need to wait for the price reaction here. So because if the market decides to pull back again, we can see eventually the formation of an inverted head and shoulders. Okay, let's see how the market will react here. But if the market decides to pull back and then, of course, a violation of the neck should trigger that pattern. But eventually, let's observe how the market will react here. But I will not be surprised to see a pullback, the formation of the right shoulder, and then finally the violation of the resistance, triggering the pattern, and a couple of moments where the market can trade the upside of these markets at this point. So for the Kiwi, I will of course pay attention to the formation of the crab pattern below, projected at 70.53. And let's finish with gold. And I shared this a couple of days before, projecting this eventual, and it's still possible to print that pattern, that potential or that eventual crab pattern, the bullish crab pattern. If printed, it will converge with the major 38% Fibonacci retracement level. It's not so strange. It's not strange for gold to see a retracement back to that Fibonacci level. So let's increase the time frame a little bit into a 2 hours time frame chart. So I still believe there's room for that to happen. As you can see, we have this technical double top, which makes these lows, transforms these lows into a next zone. So as soon as the price breaks this next zone, we assume the price will trade the 200% Fibonacci extension level. So which means 1850, it was my default projection for this technical double top. And as soon as the price touches this level, it finds support a few points below, trying to bounce from this price zone. At this point, I still believe there's room to see this price being formed at some point in time in the future. So let's see if that will be the case, but I'm still waiting for a new lower low for gold. And that finishes the introduction for today. Some of the charts that I shared with my subscribers, some of the trades that I pushed, some of them not triggered yet, some of them I will think about the possibility to push some of those, but I will say that the majority of them with I believe the Australian dollar, which is not trading in profit at this point, all of the others trading decently in profits, and the best example for the WTI and the SPX 500, both of them offering very nice runs to trade. So I hope you enjoyed this video. I will update more charts during this week, eventually for tomorrow or the day after tomorrow. I need to check the market environment for today, between today and tomorrow. Let's see how the market will react. We have nice data for today. Let's see if that will create some impact on price action. So stay tuned, and don't forget to subscribe, of course, if you want to get notified once I publish some of those patterns and some of those videos. If you want to get notified, you need to press that subscription option below the video and press that bell also to get your notifications on your mobile once you are traveling over the country. So that being said, thank you very much as always for being here. It's always a pleasure to share some of my views with you. As always, I invite you to join me on Telegram, to become, if you are not a disciplined trader, you can be one if you adopt some of the tools that we have at our disposal that will help you for sure to keep your discipline process under control, which allows you to keep yourself or your emotional behaviors also under control. So I invite you to join us there. And be here the next time. It's always important to be here tomorrow. Stay well. Thank you again for being here. All the best for you and for your families. See you the next time.